And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends and family. Welcome to the Market Forecast. Today's Wednesday, March the 30th. I'm John Hoagland. Thanks for trusting me with your time this morning. As always, our focus is on context of the markets, always thinking about good risk management and staying patient in the markets today. If you're in the markets already, as always, hopefully things are going your way. As far as economic numbers this morning, 7:15, the ADP employment numbers came out. They were looking to add an additional 450,000 jobs the last month. They added 455,000. The GDP number came out a little bit lower than they were expected. They were expecting 7.1%. Came out lower, 6.9%. Markets are responding and absorbing that information now as we speak. We're still waiting for the EIA petroleum status report here at 9:30. They're looking for a 1 million barrel draw after last night's API announced a 3 million barrel drop in inventories. We've got crude oil heading back to the upside. As far as other news that traders are focusing on, of course, we're all focusing on Ukraine. Hopes for peace in Ukraine are being downplayed as Russian shelling continues. The White House has stated that no one should be fooled by Russians' claims of de-escalation. I see a comment in the chat here. A lot of speculation that any de-escalation would just be time for Putin to reboot, and hopefully that is not the case. Germany is now taking steps toward rationing of natural gas. Their CPI numbers came out this morning considerably higher. Obviously, inflation rampant around the globe. And of course, crude prices have firmed again after the API announced a 3 million barrel draw last night. Again, EIA looking for a 1 million barrel draw this morning. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome, as well as love here on the Market Forecast and the Market Recap. Subscribe to our YouTube channel. You get notifications when we do go live. Today is Wednesday. It's group coaching day. I'm going to put the link into the chat here so you can all come in and ask questions. Of course, nobody knows everything, but we're going to learn together. I certainly don't know everything, and we're going to see what we can learn together. It's one of the things I love about the group coaching is the fact that we get to work together and learn. This morning, the VIX up 4.5%, but still below that 20 level, 1975 last I checked. Dollar index down slightly this morning, 98.04, and the yield on the 10-year largely steady at 2.4% as we wait for more information. Hey, I just got word that not only is my little brother Tom watching, Mom's watching too. So everybody be cool, hide the beer. Let's say good morning to everyone. Hey, Brian, first in the room, you win the prize this morning. Shaw, good morning, Cool and the gang. Bill, good morning, Manuel, Tachyon, James, Zach, Scott saw, and he conquered. Frederico, Theo, good morning, Brody from Olympic Peninsula, put in just stalling so he can reposition. A lot of speculation on that. My brother Tom is here. Good morning, Tom. Tom is always getting his steps in. He posted his steps, I guess, from yesterday, or is that already this morning, Tom? I love you. John Doherty, good to see you this morning. Terry, Three Lines Insight, Galen, Dan Trading, Denise, Spencer, good morning. Ricardo, Rusty Golfer, that's me. Kirill, Devant, Rogue Trader, Expediter, Dean, Dave Francis, Michael, good morning. Zachary, good morning to you as well. Luis, hello all. But yeah, it was a nice vacation. Weather could have been better, but it's always good to get away, and it's always good to get back. I'm feeling a lot more grounded in the markets today than I did yesterday, and we're going to be taking a look at those here very shortly. Where am I? Stephen C., good morning from London. Michael? Oil held that negative 35 move from 30.50 after they said de-escalation. Michael H., good morning. It's my pleasure. I enjoy doing them, and my only hope is that they're beneficial to you. You know, that's what the goal here is we're all looking forward to your success. Good morning, Sarah Hall. Good dawn to you, and love the heart. We all have the prayers hopefully going for Ukraine and for us all, of course. Jay, good morning. Michael, Zachary, Tom saying hi to Mom. Isaac, Nicholas, Trading Research, welcome back. Do you have any info on what the CME data situation will mean for us down the road a piece? The CME is a publicly traded company. They are, I'm sure, doing what's best for their shareholders. I don't have any speculation as to what any changes are going to be as far as the CME data fee situation, what they're going to do with it. It seems to be a moving target right now. We're getting information as we get it, and we're going to be letting everybody else know the information as we get it. Tachyon's bringing the vodka, so we won't have to hide the beer. Good morning, Eric. Good morning, Michael, Joe, Vince. Good morning, Sarah Hall. Do we have to hide the beer? No, I guess we don't have to, as long as we're 21. This morning step, 7,300, 3.2 miles. Tom, he's always out there walking, man. I really, it's inspiring, Tom. I've got to get out there myself. Lacey's over here saying good morning and looking to get pet, so she's saying good morning to everyone. Dan Trader, Mom is here. Yep, Nabil, Ireland, Tile and Marble, Montana morning. You're out in Montana, man. It's beautiful out there. I swear, I think that's where God lives, up there somewhere near the Continental Divide, up there, going to the Sun Road. For good, what it's worth, good with top of book only. Okay, if Bitcoin can reach 48K, ES can see a 48 handle. I'm kind of fully expecting over time for the S&Ps to reach well beyond that. Hopefully that's going to be the case. All right, so we've got everybody here. Everybody's saying good morning. Let's jump into the charts and see what we see here. We got the S&Ps kind of in a interesting spot here. Let's take a look. Okay. Anything can happen. That's our new acronym here on the market forecast. ACH, anything can happen. So the higher price yesterday on higher volume in New York as well, with an increase of 16,000 estimated new contracts, new open interest, is indicating that this upside auction still remains healthy. We've closed above the weekly kickoff high, which is that big fat round number at 4,600. Settlements 4,625. We've taken a look back to weekly kickoff high, which which is sometimes resistant. Coming back to it can be supportive. Our overnight low, $2, 8 ticks above that weekly kickoff high, which I just grabbed and moved. Didn't mean to do that. So we're at least holding above that level. Again, anything can happen. The one time framing in the short time frame here on the daily chart and the weekly chart. Weekly, roughly 3 weeks, we've been one-time framing higher, and we're still getting open interest in the long side. So the auction is presenting as continuing to be healthy to the upside. I think that's a good thing. Again, with that caveat, anything can happen. There's still all of the same uncertainties in the world that we started with a month ago. It's just we've had time to digest, and I guess as far as markets are concerned, cooler heads have prevailed. Anything again can happen if there is a new negative impetus. This can all come tumbling down. There are certainly some structural weaknesses in the charts down below, but they're only going to be important when they become important. Take a look at the 30-minute chart. Okay, we had a late spike on Monday. Tuesday, we had overnight inventory to the long side. We were unable to close the gap. The market closed above this important inflection level of 4,600. It really chopped around it, but then found some legs later on and attempted to put up a late spike. I'm not calling this a late spike. This looks more like excess or rejection. Price got too expensive and rejected. It is still presenting as excess. We are opening below that level. Settlement again, 46.25 half. We've got overnight inventory holding to the short side. So in other words, all of our overnight activity was pushing price lower. We can then make the assumption, because there's such low volume down there, that this is shorter time frame, weaker hands traders betting on continuation to the downside as the U.S. regular trading hour session opens up. We don't know if that's going to happen. What we're trying to do is we're trying to find levels where we can depend on the opportunity to limit risk. Okay, if there's anything that we're going to be doing today, it's going to be to lose as little as possible. We can make money over time if we lose as little as possible. The less you lose, the more you're going to make. So where are those levels that might give us those opportunities? Well, we've got a longer time frame, big fat round number down here at 4,600. That could be an interesting level for us to take an execution, because again, it allows us to limit our risk. What about that point of control from yesterday? It looks like we're going to be opening in range and inside the value area from yesterday, indicating that there's very little change in the perception of value, which may tell me that I want to remain calm and stay cool and not rush into anything too early today, because the better trade locations may come as the day goes on. Weekly kickoff low, an important inflection level for us. Didn't do much for us yesterday. We're coming at it from a different angle now. Coming at it with some overnight short inventory. If the overnight shorts can't see this market continue down below this level, they're likely to cover all those shorts and push price back towards settlement, which again gives us another opportunity. Our regular trading hour session high, our overnight high, settlement, all relatively close. Got a naked point of control from the past up above that. There's likely to be fish here, likely to be some fish down here. I'm kind of even focusing on the overnight high and low initially as the day begins. So opening in range and in value with no gaps, no spikes, no nothing. I'm going to sit on my hands a little bit this morning. The opening range trades have been, haven't been all that great in the S&Ps, and we're opening in value. So I'm going to, again, look for better trade locations as the day goes on. Now, Eric has a question here. Can you explain weekly kickoff low and high? The weekly kickoff low and high are levels that we come up with that we believe longer time frame traders are going to be forced to adjust inventory. It's going to push the longer time frame traders into the marketplace. Sometimes they are great levels for execution immediately, where there's a reaction very quickly away from them. Yesterday in the S&Ps, we saw a situation where the weekly kickoff level attracted activity for a while and then was rejected. We're testing back down to it today. That can be rejected. So the weekly kickoff levels are not meant to envelop a weekly range that's expected. there are levels in longer time frame where we're expecting to see evidence of longer time frame traders entering or exiting the market. Bigger, stronger traders, more contracts, bigger moves. All right, Eric, that's a great question. Thanks for asking. Let's take a look at the crude oil now. We're in the opening range. Okay, we had a test below weekly kickoff low yesterday. We were unable to close down below it. 103 even is weekly kickoff low. Lower open interest indicates that we may stay in some continued range-bound activity. We've got a pennant formation, triangle formation, whatever you want to call it. The market is putting in lower highs and higher lows. It is compressing. It is building energy, if you'll pardon the pun. And these situations do provide really good opportunities. We're looking at the high here, the low here, a low here. We're looking at about 75% to the apex before we'll really start hawking for a breakout outside of this. But again, anything can and will happen. Yesterday, on an attempt below weekly kickoff low, we lost 5,000 contracts in open interest. What happened? We got too cheap. Some shorts decided to cover and brought price back up above that important inflection level. So here's our look yesterday. The sellers came in. We opened. We just basically recovered all day long. Is there indication in Delta of longer time frame traders coming into this market? Not really, because Delta is congruent with direction. Doesn't mean that they're not here. And we lost 5,000 in open interest. That would indicate maybe some longer time frame traders getting out of shorts. All right, so now what are we looking at? Well, settlements down here, 104.24. Couldn't close below it. If we get an opportunity back down to this level, it might be an interesting opportunity for us to take an execution. But we're opening now with a gap. We've got long overnight inventory. We're going to be trading gap rules. If we can't close this gap relatively early to the high of yesterday's regular trading hour range, we're going to be looking for opportunities to look for longs. We got overnight inventory to the long side. If they don't get what they're looking for relatively early, we may see that push back towards a potential gap close. We've got some potential targets, visuals above the marketplace. We've got a previous gap that remains unchecked. We've got a point of control here that remains unchecked in regular trading hours. We've got yesterday's point of control down here, which is exactly at the weekly kickoff level. So that's one of the things that we look at. Sometimes the market is going to reject very quickly. Sometimes it's going to digest in that area, move away from it, come back to it, and that's when our opportunity comes in. I don't know if we're going to get that opportunity today, but we may. We don't know. We got to see how things go. Just opening up. Our visuals above the gap. This point of control up here. And we've got point of control way up here. Big volatility in this market. So these weekly kickoff levels are a little bit further away. Let's see what the opening range did for us. Didn't do anything for us yesterday. Still in it. At least it's only a 32 tick opening range. Oh, no, we did peak above it. But it's a 32 tick opening range. We had a 60 tick opening range yesterday, which is a little too rich for me. So we took a look above it. This may be a failed auction up here. We've tested down to the opening range low 4 times in 4 minutes here. Remember, we've got a lot of overnight longs here. If we start to take out the opening range low, we may see some sellers come in to take some profits, or if they're stuck long up here, we're going to come back and see how this opening range played out, just to kind of review what we were looking at on the 30-minute chart here. Overnight longs. Opening range, took a look above the opening range just by a couple of ticks. If that can't continue, we start to see this market pull lower. Our late to the party longs might start the fire to push us back down lower. If we do come back down, we've opened out of range and out of value. There is a potential for a value area special situation play today. If we open out of range and value and we reaccept inside value at some point during the session today, there's a probability that price could go all the way to the other extreme of value at some point in the session today. We do see this happen. If it happens today, we'll check it out on the recap today. Not suggesting it's going to, but if the situation presents itself as finding acceptance back inside yesterday's area of value, then we're going to be changing our tune a little bit. If we get a pullback towards the gap close, I'm looking for a long there. But if we start to show acceptance inside value from yesterday, that changes everything to a short. Got a couple of targets up above. Nasdaq. Same but different as the S&Ps. The S&Ps closed above that important inflection level yesterday, but the Nasdaq did not. The Nasdaq has been holding itself as a weaker market than the S&Ps. The volume and open interest was higher, similar to the S&Ps. So it looks like we did bring some buyers here, but not enough to force more buyers into the market above that level. Adding 1,500 estimated in open interest yesterday. The 30-minute chart, settlements up here. You're gonna no gap close. Remember, we had the spike yesterday. We ended up resolving higher as we might expect after the spike special situation. Settlement up here again, 15,237.75 exactly. But again, overnight shorts, inside value. What am I doing? What am I doing? I'm going to be patient. I'm going to be patient. I'm going to let the market establish an early range, and then I'm going to trade the extremes of that range. The market is really exhibiting very little change to the perception of value from yesterday. Better trade locations may come as the day goes on. What's going on with gold? All right. Yesterday, we had play with the weekly kickoff low. This was a relatively disappointing auction to the downside after breaking out below JD's bear flag here. Okay, especially when the weekly kickoff is also in play in that regard. We looked lower, we drove lower. This long shadow down here, this long wick down here, is looking like excess or rejection. Now we've got the market kind of testing between weekly kickoff high and this trend line. It's kind of stuck between a rock and a hard place here, it seems. If it's magnetic to weekly kickoff low today, it's going to be a really choppy day. Try and avoid using weekly kickoff low as a long above, short below level until we get some acceptance either side of it. Right now, the market is really just kind of chopping around that level. So just a brief look back to this. The picture here looks like it's really just kind of falling into balance. I'm going to probably be using balance rules. In other words, looking to buy the lower extreme of balance and sell the upper extreme of balance until proven wrong. 30. Okay, here's yesterday's dive. Okay, here's the gap from Monday to Tuesday. We're in the gap. I put this red line here because this is the base of the late spike that was set on Monday. Okay, here's that late spike. We opened, we traded lower. We never did come back to test the base of that late spike, which we just did now. Okay, this red line is the base of that late spike. Got pretty far through it, but now we're spending some time closing this gap. We've got a gap in the market here between yesterday and today. If we can't close that gap, I'll look for continued acceptance of higher pricing. If we close this gap down to here and we start getting back into yesterday's range, value area special situation comes into play again. Okay, this is a day that if we do get into a value area special situation, there's a lot of repair in this profile. We've got a high volume node here, very low volume here, high volume node here. If we get in between those, pretty good probability we're going to trade down to the lower high volume node or to value low. This is also an area that bodes for repair because this is a gap. We did not spend any time in regular trading hours inside this box. All right, let's take a look at the euro. So here's a good example of how the weekly kickoff high in the euro has been resistant overnight. Will it remain resistant in the regular trading hour session if we get there? We looked at this yesterday and we were like, okay, well, we're kind of range bound here. Their recap yesterday, we were thinking, okay, that's a pretty good volume. This might be important as long as we bring in open interest, which we did not. There was a loss of 300 contracts in open interest. Basically, moot. Nothing that important happened here. Well, it makes sense because we're range bound. We're still kind of short time frame controlled, and it's this weekly kickoff level here that we tested to last night that I believe is going to force longer time frame traders into the marketplace, whether they're going to get out of longs, whether they're going to add to shorts, whether they're going to push price higher and be forced into getting out of shorts or adding to longs. One of the two things is likely to happen, and it looks like this one is going to be somewhat repellent. Sometimes they get magnetic, like we've seen a couple of the charts this morning. They got a little bit magnetic. Here's the 30-minute chart. So here's yesterday. We had a gap. No gap close. Market still is presenting as a market that it looks like I want to buy weakness in. But if we get the chance up here at weekly kickoff high and regular trading hours, it's a good risk limiter. I don't want it to go too far through this weekly kickoff level because that's going to start to look like it may be showing signs of acceptance above that level. Okay, so here we are. We're in range and value. I'm going to stay patient. I'm going to sit here and I'm going to see if I can get an opportunity to buy below yesterday's value, if that's in the cards, or I'm going to really be looking for an opportunity to see how the market reacts up here at our weekly kickoff high. 111.93 even is exactly the weekly kickoff high. Traded to it to the tick and then came off. Again, this is overnight. This is London session. There's still a little bit of volume in there. The London session. Okay. All right. Let's take a look now at the 10-year and net gas. So we were suspecting yesterday that we may be getting a little bit too short down here. It does appear that was the case yesterday. We put in a higher low and a higher high in a market that has been one-time framing to the downside. We lost 9,000 in open interest. That loss of 9,000 in open interest indicates short covering. We've got some profits in this market. We're going to take some of that off. We're all well aware that rates are going higher. This market is still a market that I'm looking to sell strength in. We've got some directional activity. We've got a balance area. Directional balance. Directional balance? Are we overlapping? Is this auction getting a little bit too short? It's what we were kind of suspecting yesterday. So I'm going to really be picky, I think, on any trades that I'm going to take in this market. And I want to be really picky, looking for any shorts that I want to be able to hold on to for any period of time. Longs should be taken at profit targets. Shorts in good trade location may be held for a little bit longer because that's the market state. Okay. All right. Here's the 30 for the 10-year. Overnight inventory got long, overnight inventory adjusted. There's no overnight inventory with which to think about. We did not open with a gap. We did not open with a spike. We did not open anywhere but inside value. So that tells me again that I'm going to stay patient because I'm going to be looking for better trade locations as the day goes on. We're in value, very little change to the perception of value, smaller opportunities. Look for extremes in the daytime frame for your opportunities. And now to the nat gas. We were, looking at what happened on Monday as potential rejection, and it is proving to be rejection. Yesterday on the recap, we said, all right, well, we're going to be looking to see with the amount of volume we added here, okay, rollover is still partially in play. We added 12,000 contracts in all of the contracts of natural gas yesterday. The fact that we added open interest on a down day on higher volume, to me, is encouraging to say there's probably more to the downside to this market. Overall, the longer time frame is to the upside. Okay, we had some naysayers to the upside coming in yesterday. Are we already too short? Take a look at the 30-minute chart. All right. So here's yesterday, some pretty decent push, some additional open interest in the future months. We lost open interest, of course, in the expiring month, but overall we added 12,000. So that's some considerable open interest. Okay, we're in range, we're in value. In short time frame, we're putting in lower highs and lower lows. Is this an opportunity for us above value from yesterday to look for a short? If we can find a way to limit our risk, I would say yes. But I'm going to be looking for structure before I do anything. Markets are always challenging. One of the things I asked around the office one time was if there was one word that encompasses trading. What is trading? I always thought it was paradox because there's so many paradoxes, and we're going to be, I think, doing a presentation on the paradoxes of trading here soon. Somebody came up with enigma, and an enigma is a puzzle you can never solve. And because markets are always changing, because the psychology of the market, the psychology of the group psychology of markets, our personal psychology, all of these things have a factor in our decision-making processes, and we never know the outcome. We never can be 100% positive of any outcome in trading, and that's what keeps me coming back. It's like, even if you're not a great golfer, you can still enjoy the game. Rusty golfer, you get a couple of good strokes every round, and that's what keeps you coming back. Hopefully the divots get a little smaller every time, but it's a lifelong journey that we continue to hopefully get better and better at. We got a lot of comments here. Nico, In your group coaching, can you discuss some of your trades using or with the help of market profile, where and why you entered or exited a trade? Of course. Remind me in group coaching. I'm going to see if I can't mark a couple of them on the charts. I was off all last week, so I got to go pretty far back to find any a lot of good examples. But we'll see if we can't find something from yesterday or today. Thinking about buying weakness in crude oil leaves me wondering about an entry point. I like the prominent point of control from yesterday as a possible point of failure for buyers. If point of control fails, I'm wrong. Let's see. Yeah, unfortunately, that point of control is pretty far down. I mean, that's basically weekly kickoff low. We got a long way to go before we get to that. We've got a gap. We've traded two of the previous gap, 108.49, the bottom of that gap. It's not a very big gap. It's maybe 20, 30 ticks, but seeing a little bit of possible resistance up against that level. Nico, I'm glad you're reading Mind Over Markets. Really does help with the big picture, and the explanation of the auction process, I think, is really something that helped me a lot. About 152 days from the 10/25/21 highs. We got some timing going on here. Fred, thank you for joining in and helping Nico. Definitely not Enigma. It's a movie. Is that a movie camera? Wadad. There are 111 watching, only 36 likes. Oh, thanks, Wadad. We appreciate that. You like the addition of natural gas. Good. Good, I'm glad, Fred. David, have a great day yourself. Michael, thank you. Thank you, Nico. Thank you all. Here's a weird one. I can trade fine on my own, even live. I can pass step 1 in the practice account many times over, but every combine that's eligible, I blow it. Why? Good morning, Rick. Good to see you. We have Tom and Mom and Rick. We got the whole family pretty much here. Zach, my pleasure. And it's always a pleasure to be back. Trading research. Every step you take towards getting towards a goal, and goal setting financially or time bound in trading, I think is counterproductive. But every time you're able to trade in the practice account, because there's no accountability, there's no rules, there's no consequence. The decision making is easy because of that, and so you trade basically like you don't have to care. If you were able to trade that same way in step 1, you would probably be able to perform the same way. But because there are rules, goals, accountabilities, and consequences for your actions, it makes it that much more difficult to make the decisions. And every step you take closer to a funded account, or in a funded account, or your funded account, or building your funded account, it gets increasingly more difficult to make those difficult decisions. You're in a practice account, you're doing well. Good. Go to the trading combine and continue doing what you were doing in the practice account. It's not that easy. It's not that simple, because the decision making changes with risk. You get through step 1, step 2, it's going to change again. It's going to turn up the heat of that decision making and making it more difficult. So just continuing on the process of going from from sim to step 1 to step 2, and to be able to make the same decisions in very difficult situations under duress is what I think makes it so difficult. I'm working on a couple of things. An educational webinar or whatever about the paradoxes of trading, and this is one of them. Another one we're going to be working on is ways to find the path to be successful in the trading combine. Now, I could, if I had one, I could hand out a trading strategy that would work over time and make everybody money. But if I handed it to 100 different people, 100 different people would have 100 different outcomes. It's because we're going to put our thoughts into it. If it's a mechanical strategy that we know is going to work over time, we're still going to screw it up. We're going to optimize it. We're going to say, geez, it says to take this trade, but I don't like this trade, so I'm not going to take it. Or you're going to say, well, this looks like a good trade to me, but it's not in the strategy, but I want to take it anyway. Everybody has their own decision-making process, their own motivations, their own ability to withstand duress, stress, the ability to stay disciplined to their strategy. All of these things come into part of it. It's a great question, trading research. And Lacey says, hi, she's over here moosing me. And something that's worthwhile for a much longer conversation than we have here. Trading research, come to group coaching today. Come to group coaching every day. One more thing before we call this a forecast. We're getting pretty close to the open here. I got my dog over here. I got my coffee. I'm ready for the open. Tomorrow, make Hogue money. Let's make Hogue money. I'm not going to put the link in now. I'll put the link in on the recap and then tomorrow morning for the forecast. But make Hogue money. You guys make the decisions. We'll talk about them. You'll all vote on them. I'll take the trades, and we'll see what happens. It's usually about 8:20, 8:25 right after the market forecast. And you guys have to make me money, so I love it. All right, we'll see you in group coaching today at 1:00. Blessings to you all. Keep praying. Be good to yourself. Be good to others. Take a deep breath. Get out there and profit today. Trade well.